Did you see this stat by the Luthold Group? They said it has now been 50 trading days since the low, the strongest 50-day move of the index. But they showed conditions accompanying new post-World War II bull markets. And they're looking at valuation stuff, momentum stuff, internals, advanced decline line, things like this. And there are 8 conditions. And previously at lows, at least it looks, I'm eyeballing this. At least 5 were met. 5 of the 8 were met. Right now we're 0 for 8.
I'm going to pull my this time is different card. This whole thing is just, the market bottomed on a 9.4% day when everyone said, markets, this is not a good sign. When markets bounce 9%, that never marks the bottom. Guess what? It did. Like, I just don't think with this specific market that you can use history as a guide at all. Things are happening way too fast, and it just, I don't see how anything regarding history with this, because something like this has never happened before.
All right.
I'm just saying. I'm saying throw it out the window.
I'm just saying.
Throw it out the window. You're maybe I should become a trader like you. Credit where credit is due. I called you a noob whale for buying Jets, and you rode that to a nice profit. And not only that, you got out of slack like the day before it got crushed from an earnings release. So credit to you. I'm going to pull some of that credit back, though, because you sold too early. It's up 5% again today, so I give you 80% credit. You should have held on to it for longer. That's what I'm going to say.
I'll take the 80%.
What's next on your Trading Action Alerts Plus for subscribers?
I'm waiting for a pullback.
Okay. From this obvious dead cat bounce. Okay, so Friday saw this huge uptick in markets, and honestly, a lot of the action lately, we've talked about this, has felt a little euphoric. I thought the most euphoric day to me was Friday. It felt like people started getting back into like, oh my gosh, this is actually real. And so one of the things was, so the consensus unemployment numbers were, they thought...
Wait, hold on. Before you get into the numbers, let me just confirm your suspicions, your feelings. Tom Harridan tweeted, today's volume was 17.6 billion shares, the most volume on an update in a decade. And one more, Citi has this panic euphoria model, which is all quantitative, at the highest level since 2002. So it is crazy how I tweeted this. We went from recession to depression to recovery to euphoria, literally in under 100 days.
We're 5 months into the year. And so Jim Bianco...
it's June.
Yeah, but June's not over yet.
Fact check.
Sorry.
Go ahead.
5 months and 1 week. Thanks for the actually. Jim Bianco tweeted that the consensus among economists was a payroll decline of 7.5 million people and the unemployment rate would rise to 19.1. When the actual numbers came out, it was 13.3%, but apparently there was some problem with the numbers. It should have been higher. It should have actually been 16.3, but what happened was they basically said the big takeaway, so the BLS puts out this data. They said it's really hard to collect real-time data during a pandemic, and I guess the unemployment rate actually should have been higher in March and April, but it actually should have seen a bigger decline in May. So regardless, a ton of jobs were added, and it was like 2.5 million jobs, when again, the consensus thought 7.5 million were going to go away. How did everyone get these numbers so wrong?
I don't know. What are some of the things that you were reading?
I looked at like the all employees for leisure and hospitality on the Fred website. There was 1.3 million jobs added to the hospitality sector. I don't know if people, I mean, that's extra after 7.5 million were lost. So, I mean, again, these increases are coming off of a low base. People keep saying that.
Liz Ann Saunders tweeted this. Leisure and hospitality, as you mentioned, by far the most, followed by construction, education, health services, retail, trade, manufacturing, et cetera, et cetera.
Is it possible that people were still underestimating the stimulus and what was happening there, and the fact that the PPP would cause people to be rehired, and the fact that we're coming into the summer months, so a lot of these leisure and hospitality places that were going to be opening up, they rehired some people. That is just such a wide... there was literally no one saying, I'm going to take a contrarian stance and say we're going to add 3 million jobs this month. And it was wild, and obviously the market liked it. Again, things are still pretty bad. There's still tens of millions of people unemployed, and
there's a million charts to choose from in terms of what stands out. But the one from Bill McBride in terms of the percent of job losses relative to peak employment month for this recession versus all others, to me stands out as still the craziest chart. And so yes, we're up 2.5 million, or we added 2.5 million jobs, still 32% unemployed, still by far bigger than anything that we've seen in a long time.
I guess maybe the hope is that this summer there's going to be more people coming back to work than initially thought. Maybe that's the hope. That's all I can think. Because this seemed like I don't know, things are going to open back up. Maybe we'll have a sell the news moment. That has not happened. This was like the market was legitimately surprised and had a huge jump on Friday. And it's, I guess, again, you see all these people say, oh, I guess with $6 trillion from the Fed and $3 trillion from the government, what do you expect? But guess what? That was real-time information. People knew that was happening and still didn't realize this. So Stanley Druckenmiller was on CNBC this morning, and on May 12th, he said the risk-reward for equity is maybe as bad as I've ever seen it in my career. And, of course, everyone says, well, who would you rather be with, Robinhood traders or Druck? And, of course, you pick the legendary investor. To his credit, he said, listen, I've been humbled many times in my career. I'm sure I'll be many times in the future. And the last 3 weeks certainly fits into that category. He owned up to it and said, listen, I was wrong. I underestimated the Fed. He said he's been humbled by it. He didn't really think this would happen.
Listen, me and Druck, we underestimated the Fed. I get it, man. He said he returned just 3% during the market's 40% rally. He has been, so he was very wrong, I think, on gold a few years back. I think it was the Iris Own conference. He said, I've been so wrong. That's why I'm making the introduction instead of being interviewed. But yeah, this is sort of in his wheelhouse in terms of admitting that he was wrong. So
yeah, and
huge kudos to him.
I give him credit for that. And he says, I underestimated the Fed, but a lot of people that are complaining will say, well, of course this happened. We had $10 trillion thrown into the market.
Somebody tweeted hyper asset inflation or something like that.
Yes, there's hyperinflation exists, but only in financial assets. Right. The calling card of a charlatan.
One other data point from Sentiment Trader in terms of how bullish people are, euphoric in fact. He showed a chart, small trader calls, buys to open, millions of contracts. It's absolutely went parabolic. This is wild.
So this is retail investors hitting the options market?
Yes.
Okay. And so it looks like it went from, I mean, this thing was below 4 million.
It quadrupled.
Yes, in about a month's time. And it looks like it's been rising since basically 2019 as well. Nothing I would ever predicted that we would get late 1990s type trading activity from retail.